Money is a topic that occupies a significant space in our daily thoughts and conversations. For many, it is a source of persistent worry, a constant cycle of earning just enough to cover the bills. For others, it represents a means to plan for a future that feels secure and full of possibility. The fascinating truth is that wealthy individuals often perceive and interact with money in a fundamentally different way. This distinction is not an indictment of one group. It's not about being inherently better or smarter. Instead, it's about making a series of different choices, small and large, that compound over time. These choices, rooted in a specific set of beliefs, separate financial struggle from financial freedom. The journey toward wealth is less about a single lucky break and more about the consistent application of a particular mindset. It's a marathon, not a sprint, built on deliberate habits and perspectives. This essay will explore 7 core beliefs the rich commonly use. These are not complex financial algorithms or secret strategies available only to a select few. They're simple, accessible principles in how one thinks about money. We'll break down each belief with clear examples and provide a small, actionable step you can take for each one. The goal is to demystify the process and show that adopting a wealthier mindset is within anyone's reach, starting today with a single, conscious choice. The narrative often says wealth comes from extraordinary talent, immense luck, a privileged starting point. While those factors can play a role, they're not the most common ingredients in financial success. The more prevalent path is paved with discipline, patience, and a deep understanding of how money truly works. It's about the choices made on a quiet Tuesday evening. Choosing to read about investing instead of another episode, or setting an automatic savings transfer instead of an impulse buy. These minor decisions are the building blocks of a strong financial future. For many, money feels purely transactional. It's earned to be spent. A paycheck comes in, and it's immediately assigned to rent, groceries, bills, and entertainment. What's left is disposable income for immediate wants. The rich see money as a tool for creation and growth. They ask, how can this dollar work for me later? That mindset prioritizes assets over liabilities. Assets add to your pocket, liabilities drain it. A high-end car depreciates and brings insurance, fuel, maintenance. A modest rental can cash flow and appreciate. Capital goes into businesses, real estate, stocks, bonds. Given a $5,000 bonus, skip the splurge, seed a small e-commerce shop and grow a new 500-month stream. We're bombarded with instant everything. That urgency spills into chasing risky windfalls. The rich operate with a long-term vision, 10, 20, even 30 years. True wealth isn't built overnight. Compounding lets earnings generate their own earnings. Small sums, consistently invested, become staggering. The wealthy embrace the slow, steady process. Consider Tom and Alex, both invest $200 a month. Alex trades on headlines and tips, a roller coaster of gains, losses, and fees. Tom auto-invests in a low-cost index fund and doesn't touch it for 20 years. Decades later, Tom's patience compounds to a larger nest egg and less stress. The wealthy aren't reckless or paralyzed. They live in the middle ground. Playing it safe can let inflation quietly rob you. They study, analyze upsides and downsides, and plan contingencies. They diversify across stocks, bonds, real estate, and industries. They accept possible losses for greater long-term potential, after mitigation. Maria keeps her job, tests a pop-up, refines recipes, builds a following, then scales to a kiosk before a full cafe. Your move: pick a small risk. 1. Learn basics. 2. Start tiny, $25 level. 3. Hold for a year to learn without panic. This turns scary risk into a manageable, educational experience. Many graduate with little real-world money knowledge. Investing, budgeting, debt management, taxes, often seen as boring or intimidating. The wealthy treat financial literacy as a lifelong pursuit. The best investment is knowledge. They learn the language and rules of money consistently. Books, reputable news, podcasts, seminars, mentors, and networks. Mistakes become tuition for smarter future decisions. James dedicates 30 minutes a day, blogs, an index fund classic, a real estate podcast, one idea at a time. Your move, 1 hour per week on a money topic. Watch a solid video, read a chapter, or listen to a focused podcast consistently. Motivation is finite. Willpower fails. Relying on it to save, invest, and budget is fragile. The wealthy build system so good behavior happens by default. Success runs in the background. Invert the flow. Earn, save, invest automatically, live on the rest. Treat your future self like the most important bill. Anna schedules 10% to emergency savings and 5% to an index fund the day after payday. Money moves out before temptation hits, and savings finally grow. Your move. Set a 10-week recurring transfer now. Build the habit, scale it later. Money triggers powerful emotions. The big two are fear and greed. Fear sells at the bottom, locking in losses. Greed buys the peak, just before it pops. The wealthy separate feelings from strategy, using logic, data, and a plan. In euphoria, they rebalance and sometimes trim winners. In crashes, they consult the plan, keep contributing, and sometimes buy quality at a discount. Your move. Adopt a 24-hour rule for major buy or sell decisions after big market events. Step back, breathe, review your long-term plan, then decide with a cooler head. You're the average of the 5 people you spend most time with. Circles that complain and consume make new habits hard. The wealthy curate ambitious, growth-oriented circles. Discuss business ideas, investment strategies, and long-term goals. Their success becomes your roadmap and accountability. Share saving for a rental. One group says too risky, party now. Another shares tips, books, and a broker. Your move, join one group. Online forum, local club, or pro network on investing, entrepreneurship, or personal finance. Listen, read, and absorb. New conversations reshape your trajectory. The way the rich think about money isn't secret. It's accessible beliefs plus habits. They choose money as a tool for growth, patience for compounding, and intelligent risk management. They invest in education, build automation, master emotions, and curate their circle. Change starts with one small step, not a grand gesture. You can start with what you already have. Pick one action. Set a $10 auto transfer, read one money article, or write a single 5-year goal. Choose your first step, take it today, then repeat it. Small choices, compounded, create big results. Your journey doesn't start with $1 million, but with a single choice.